Hello, and welcome to this NASBO webinar on the Fall 2015 edition of the Fiscal Survey of States. NASBO's Fiscal Survey is released twice a year and provides an update on current state finances and data summaries of state general fund expenditures, revenues, and balances. The Fall edition details specifically enacted budgets for the current fiscal year, in this case, fiscal 2016. So to jump right in, fiscal 2016 marked the 6th year of consecutive annual increases in general fund spending and revenues. And overall, we see that the budget environment for most states indicates continued stability and modest growth. However, it's also important to note that some states continue to face difficult fiscal challenges due to a variety of issues. As one example, some oil-producing states have, of course, been negatively affected by the rapid decline in energy prices, and this has left them with some budget challenges to wrestle with over the past year or so. In addition, we should note, too, that while the fiscal improvements over the past several years since the Great Recession have certainly brought states into a more stable fiscal environment, it has not returned states to historical patterns of growth, and some states do continue to remain below pre-recession peak levels in spending and revenues, even without adjusting for inflation. So just to review some general fund spending trends, according to this latest fiscal survey, fiscal 2016 spending for this current fiscal year, that is projected to increase by 4.1% for state general fund spending only. And you see here this chart also shows that this does mark the 6th consecutive year of growth, as mentioned just previously. I would also just take a moment to mention here that currently, as this report went to print in early December 2015, both the states of Illinois and Pennsylvania had not yet enacted budgets for fiscal year 2016. And so in order to allow for year-over-year comparisons of 50 state data, NASBO reused figures from the governor's proposed budgets for fiscal year 2016. These were figures that were previously reported in NASBO's spring 2015 fiscal survey. And so these numbers were used for both states in just the 50 state totals throughout the report to allow for year-over-year comparisons, and these are strictly being used as placeholders, and NASBO intends to update the report and the data once those states do finalize their budgets for the current fiscal year. Another note about this one slide here is the green bar, or the second bar shown there for FY 2015, indicates where spending levels, total aggregate spending levels, would need to be in order to be equivalent to the pre-recession peak of $687 billion in fiscal year 2008. After adjusting for inflation. And so you see here that estimated spending, or rather preliminary actual spending for fiscal year 2015, which totaled $759 billion across all 50 states, is still about $30 billion below where it would need to be to be equivalent to that FY 2008 figure in real terms. Another thing we saw in this report is that states once again directed most of their new spending to K-12 and to Medicaid. You see here that K-12 received about a $14.7 billion increase in general fund spending across all states. Medicaid received about $9.2 billion in additional spending, and this is compared to enacted budget levels for the previous fiscal year, fiscal 2015. Another just quick caveat about this slide, you see here that the one program area that did have a net decline in general fund spending was transportation. But what's important to note about this is that most states primarily rely on other fund sources besides the general fund to finance transportation spending. And so for this reason, any general fund spending adjustments for transportation we don't feel are necessarily indicative of overall state spending trends in the area of transportation specifically. K-12 and Medicaid, as I just mentioned, did receive most of the additional monies available in state general fund budgets this year. And this shouldn't be surprising because Medicaid and K-12 do make up the two largest categories of state spending, both in total state from all funds, but also shown here from state general fund spending specifically. And in fact, the two categories together comprise more than half of state general fund spending. And this data, by the way, as you see at the bottom of this slide, comes from NASBO's latest state expenditure report, which was released last month in November 2015. Another thing that this fiscal survey showed was that state mid-year budget cuts are continued to be relatively minimal in the last fiscal year, which for 46 states ended in June, on June 30th. And the number of states that did enact net mid-year budget cuts was a little bit higher at 14 states, but the total amount of reduction in dollar terms was relatively small at just under $1 billion. And in fact, a number of states that did enact net mid-year budget cuts had very small reductions relative to the size of their budgets. For the current fiscal year, this slide shows that just 2 states reported net mid-year budget reductions since the fiscal year started. However, because this data was collected very early in the fiscal year for most states, it's not should not be viewed as by any means final, and we do expect to get more complete data on net mid-year budget reductions and increases in our spring 2016 survey. In fact, a lot of states would not have really had the opportunity to make net mid-year budget reductions or increases yet because those might not happen until the legislature resumes session, which for many states will be in early the next calendar year. So now turning to look at general fund revenues as well as tax changes. States enacted about $785 billion in general fund revenue based on their enacted budgets, and this is for the current fiscal year. In FY 2015, you can see that this slide shows that revenues were still below where they would need to be once again if once adjusted for inflation compared to fiscal year 2008 levels. That is the pre-recession peak year. States also reported in this fiscal survey that they enacted a mix of tax and fee increases and decreases for fiscal year 2016. When combining all individual changes by state, states enacted roughly $500 million in a net tax and fee increase for this current fiscal year, which you do see does contrast a bit with the previous couple of years where states had more of an emphasis on tax reductions, and in fact states cut taxes and fees by roughly $2 billion in both fiscal year 2014 and fiscal year 2015. The other thing to note about the reported tax changes for this current fiscal year is the breakdown by different tax type. We definitely saw some common themes to some degree, at least. Personal income taxes were in the aggregate were decreased by states. It was pretty significantly by about $1.2 billion. Closer to $1.3 billion. Whereas states, you can see here, were more inclined to increase taxes on cigarettes and tobacco products and motor fuels. There was a mix of tax increases and decreases on sales for states, but with on net, states increased taxes on sales as well as corporate income taxes. And then there were minor changes in alcohol taxes and fees, and then a mix of changes in the other tax category that kind of captures all other tax sources that aren't represented by the other categories, and that did result in a net tax decrease in that category. And then finally, looking at state balance levels in this report, one thing to note is that in fiscal year 2015, state balance levels did reach an all-time high since NASBO has been collecting this data. But this was an all-time high in actual dollars or nominal dollars only. It's not. This is not adjusted for inflation. And as you can see, also the amount represented as a share of general fund expenditures was not at an all-time high level either. You can see that the level as a percentage of expenditures back in fiscal year 2006 still surpasses where we've been at the last few years. But states clearly have been making significant progress in rebuilding their reserves since the depths of the Great Recession, based on looking at this data. Currently, state total balance levels, and by the way, total balances include both state ending balances as well as balances in their rainy day funds or budget stabilization funds. You do see that they are projected to decline somewhat in the current fiscal year to $61 billion, although that last figure does exclude data for 5 states that was not available at the time data were collected for this report. But this number can sometimes be a little bit of a moving target, particularly the ending balance amounts can fluctuate depending on revenue and spending forecasts. And so we'll have, again, updated information and projections in the spring 2016 report. Just one other thing also to note about total balance levels. Not only did they reach an all-time high in the 50-state total amount in actual dollars, but it's also worth noting that 37 states, so a very significant majority, did have total balance levels greater than 5% ending fiscal 2015. And among those states, 21, so nearly half, actually had levels above 10% as a share of their general fund spending. So overall, some of the key takeaways from this report that we feel are particularly interesting and relevant when thinking about and talking about state fiscal conditions currently. State budgets do continue to grow modestly, and states are definitely directing most additional spending to K-12 education and Medicaid, which are not only the two largest state spending categories, but are also largely dictated by mandatory spending requirements, whether from state constitutions or from the federal government. States also, once again, made minimal mid-year budget cuts in the last fiscal year, showing that they continue to adapt well to the current budget and economic environment for the most part. Revenue growth, as we saw in this report, while it accelerated in the last fiscal year, is expected to slow in the current fiscal year. In fiscal 2015, particularly income tax collections for states were elevated in part because of the strong stock market performance in calendar year 2014. And that same windfall, states are not necessarily counting on a similar uptick in this current, for this current fiscal year. And so revenues are expected to come in with showing more modest growth for this year. States also, as we saw just now, did enact a mix of tax changes, increases and decreases for the current fiscal year. And total balance levels did reach an all-time high in actual dollars last fiscal year, but are projected to decline in fiscal 2016 based on current estimates. And so with that, I'd like to thank you for taking the time to listen to this webinar. And for more information about NASBO and state budgets, as well as to view the full copy of this latest fiscal survey and a summary, please visit our website at www.nasbo.org. Thank you.